Prabhudas Lilladher is also with us. By the way, those are ICRA's numbers. Net profits have fallen almost about 6%. Hardly any revenue growth this time around, about 1.5% or so. That's been the big standout feature this time. Across the board, there's been single-digit top-line growth that many, I mean, not ICRA particularly, but many consumption companies have seen. Dilip, hi, good afternoon. I wanted your thoughts on how to approach Reliance now. It's the big loser. There's that Morgan Stanley downgrade where they're expecting earnings to halve over the next few years. What would you do at this 12.50 price?
Well, I think I would not be a ready buyer from the current levels. I would prefer to wait and watch. And more important, I think we all know that when the FI buying started, they were just focused on the few of the top liquid names. And probably on the reverse side too, they have to bear the brunt. It doesn't matter that one of the reports is talking about profits coming down quite significantly. But more important, I think the real challenging issue is that the capital intensity of the business continues to grow very significantly for the company as they continue to invest in the future. And I think the ROIs on these is something which will always come under very close scrutiny sooner than later. And in my opinion, from the current level, one should wait at least till the time the elections are not over. One should not really be buying. But on a fundamental basis, I think the stock is something where I would feel that one should really wait and watch and still see for one more quarter or two more quarters before you take a very decisive bet on this.
Okay, fair enough. By the way, two companies where the numbers are expected.
SP Tulsian are still with us. Dilip, how would you approach some of these large cap FMCG names, the likes of Titan, HUL, etc.? Would you buy them on a dip post numbers?
Sonia, sure. I think some of these stocks still look pretty good and interesting, especially both the names that you mentioned, HUL and Titan. I think we are seeing a very weak numbers in terms of the volume growth for HUL. But overall, I think on a gross margin basis, we think that overall things are coming back to shape. And we think that even this volume slowdown possibly is a temporary affair. Possibly it may last for a quarter or so. And as soon as some of this money which the farmers are expected to get, and a lot of us, we expect that's going to be used in the FMCG side. So I think all that will generate a good buoyant atmosphere. So overall, HUL still qualifies as a buy for us on every dip without any doubt. And similarly, Titan, I think, except for the fact that the watch numbers were pretty bad, but otherwise, I think the gold has been pretty good, including even the margins have been pretty good. So overall, Titan, we still feel that the volume growth along with the value growth should be pretty good and margins should be going northwards. And we still expect that the ROE will be north of 22% for this particular company. And overall, from the current levels, and at every fall, I think Titan also qualifies as a good long-term bet.
Okay, Dilip, your thoughts on Z Entertainment? The notes we are reading is that it's perhaps a very high risk but a good buy right now. Your thoughts?
So I think Z is in a very interesting dilemma in the sense it's on a cusp of a settlement. So I think if you were to take away all the noise around Z and if you were to purely value it on the fundamentals and the kind of cash it generates every year, and even every quarter, I think overall Z from the current level, the valuation should be around close to 500 to 550 rupees. But the problem, as we all know, is that the promoter's debt. Now we do not know which event will trigger first. I think the fear is that if the stake sale doesn't happen and if the mutual funds really press sales and the margin calls get triggered, I think the stock can see anywhere even up to 250, 300. That's very much possible. So I think it has to be seen on both the aspects. So we are also caught in that dilemma purely on a fundamental basis. Yes, Anuj, it looks screaming buy from the current levels without any doubt. But you can in the markets you can never ignore the other aspect, which is what the promoter's debt is at the moment.
Okay.
Asian Paints, as we speak, that stock is now at the low point of the day.
Well, I heard the results right now, and I think in a way it's quite a bit disappointing in the sense the way the profit numbers are way below the expectations. But I'm sure that Asian Paints is one stock we are all looking to buy, and the question is when. I think in spite and despite the fact that the numbers were much below the expectations, we ourselves from our side always feel that Asian Paints is one of those companies where you must think about buying. But yes, based on the results, one would prefer to wait for some correction to come. But I think another 50 to 75 rupees lower, or maybe even 100 rupees lower, one would think about buying Asian Paints from the current level. Because overall, I think this is one of the few companies that really picks up very well and bounces back very quickly, despite the fact that this time's results have been below the mark.
Okay, actually, you know what? Just pull out a chart of Asian Paints. Before we let you go, you said, you know, you would want to buy Asian Paints at some point. What would that price be?
As what I said, maybe we need to analyze this results a little more in detail. But I think overall, another about 75 to 100 rupees down from the current level, I think it would be an interesting level to acquire it for the long-term basis. Because not to forget that Asian Paints, after a long time, has setting up a new plant. And I'm sure that that speaks a lot about management's confidence also in the future volume growth. So overall, this would be a stock to look at the lower levels.
Okay, and there is that never-ending valuation conundrum, right?